Hey everyone, welcome back to Corporate Decoder, the place where we take a look at all of the biggest company reports and tell you what they really mean. Today we're diving into Beyond Meat's latest annual filing, and let me tell you, it's a wild ride. Think Rollercoaster, but instead of twists and turns, it's financial ups and downs. This report is their Form 10-K, basically a yearly checkup on the company's health. It gives investors the lowdown on everything from their sales to their struggles, and it's our job to decode it all. Beyond Meat, remember, is the company trying to revolutionize our plates with plant-based protein. They've been making headlines for years, but the question is, are they actually making money? Let's get into it. First off, let's talk about where Beyond Meat stands right now. One thing that jumps out is their public float. As of June, the value of shares held by the public was around $400 million. This gives you an idea of how much the company is worth on the market. So what does Beyond Meat actually do? They're all about creating meat directly from plants, trying to mimic the taste and texture of the real deal. Their products cover beef, pork, and poultry categories. They're in a ton of stores and restaurants across the globe. But it hasn't been all smooth sailing. Beyond Meat's been making some tough choices to cut costs, like getting rid of some product lines, such as their jerky. They are calling it their Global Operations Review. It basically means they're trying to figure out how to run things more efficiently. They're even scaling back in China, suspending operations there to save money. Tough decisions, but they're hoping it will lead to a healthier company in the long run. Along with this, and very recently in February, they have approved a plan to reduce their workforce. This means people have lost their jobs, unfortunately. Looking ahead, Beyond Meat has big plans as expected. They want to grow sales, of course, and they want to keep innovating with new products. We just have to look back to 2024 to see that they launched a Beyond IV generation of products in the US. They're also doubling down on their brand, trying to connect with consumers who care about health and the environment. Now, who's buying all this plant-based meat? Well, it goes through a lot of distributors, but a company called Dot Foods Inc. accounts for about 12% of Beyond Meat's sales. No other customer makes up more than 10%, so there isn't too much reliance on any one distributor. Speaking of ingredients, Beyond Meat relies on a few key suppliers, and it's worth highlighting one deal. They have a deal with Roquette Friers for pea protein, which is a key ingredient, and that runs through the end of 2025. Let's shift gears to competition. Beyond Meat isn't the only player in the game, and there are a lot of very large companies. They compete with big meat companies as well as other plant-based brands like Impossible Foods, not to mention the rise of lab-grown meat and other alternative protein sources. Research, development, and innovation are key to the Beyond Meat story. They've got scientists working hard to make their products better and more appealing. Let's touch on something that's becoming more and more relevant: ESG, or environmental, social, and governance factors. Beyond Meat talks about it a lot, especially around human health, climate change, and animal welfare, things we hear a lot with the company. The sales team is organized into different divisions: retail, food service, international, and partnerships. They're working with brokers and distributors around the world. Okay, now for the part that gets into the nitty-gritty. Is Beyond Meat doing well? Well, not really. They lost $160 million last year. While that's a big number, it's actually better than the year before. For the long run, a big part of their strategy is to reduce the cost of their products over time. Sales are down with a drop in volumes, and people aren't buying as much plant-based meat. High inflation isn't helping as people go for cheaper options. This means they might need to sell their products through discount channels to move inventory. Because they had lower than anticipated revenues, the company took hits in capacity utilization, which resulted in underutilization and termination fees in order to exit certain supply chain agreements. There are also ongoing concerns that more and more players continue to enter the plant-based sector, creating competition. Expanding overseas hasn't been easy either. They've had difficulties entering new markets. Just look at China, for example. Then there's the supply chain. Disruptions like natural disasters or even cyber attacks on suppliers can really mess with their ability to get products made and delivered. Now let's talk about risk. Every company has them, and Beyond Meat lays them out in detail. One big risk: debt. They've got a lot of it, including those convertible notes we mentioned earlier. Another risk, which we highlighted already, is the trouble in their international operations, like the planned pullback from China. Also, cybersecurity is a major concern. A data breach could really hurt their reputation. And finally, there are legal risks. They're facing lawsuits, government investigations, all sorts of regulatory compliance headaches. They are also in constant conflict with other countries, such as France, that are trying to ban meat names. The company has gone through numerous changes to their management team and has laid off a good amount of people. All of this is a lot for the company to deal with. Finally, some potential red flags are the accounting estimates. A lot of the key numbers and financial reporting hinges on those, and it's possible they might be off. So that's something else to keep an eye on. So let's wrap this up. Beyond Meat is facing a lot of pressure. Demand for plant-based meat isn't what it used to be. There are increasing legal and regulatory requirements, and then a lot of existing players are getting better and new players start to enter the market. They're trying to cut costs and stay innovative, but it's an uphill battle. One positive thing in a sea of negatives, the management team said there were no material weaknesses found in financial controls. They had a great legal win in France where there was a case where the government tried to ban certain food titles. But now they can use certain food titles now, and that might mean similar challenges are going to be easier for them in the future. Looking at some quick figures, the stock sits at $24.44, and there are currently about 66 million weighted average shares outstanding. For the year, they are still in the negatives and losing money while trying to stay on top of a rapidly evolving industry. In summary, Beyond Meat has a challenging road ahead, a tough industry, and a lot of ground to make up. This might mean more restructuring, more cost-cutting, and more pressure to find a way to stand out in a crowded market. Thanks for watching. If you enjoyed, please subscribe, like, and comment. See you next time on Corporate Decoder.